It's Monday, the 4th of December, 2023. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, we've got 5 big stories to get through today in 5 minutes, so we better get going with story number 1. Growth in house prices is slowing sharply, with national average home price appreciation in November coming in at 0.6%. Now, that's down from a peak of 1.2% back in May.
In other words, the pace of growth has halved. In Sydney, the growth rate was just 0.3% last month. In Melbourne, prices went backward, falling 0.1%. And the Southern Capital's annual pace of growth is just 3% compared to more than 10% for Sydney. Prices in Hobart and Darwin also went backwards last month, whereas in Perth, prices are up nearly 2% over the past year. That city is leading the way with appreciation of 13.5%. Brisbane and Adelaide also recorded 1% plus growth rates in November. Prices in Perth, Brisbane and Adelaide are now at record highs. Sydney's more or less there as well. So the housing market, with the notable exceptions of Melbourne and Hobart, has pretty much recovered from last year's slump. But the oomph has gone from the market. Interest rates are gaining the upper hand. And if the trend continues, it's going to be a tough 12 months, particularly for Melbourne and Sydney.
So why the turnaround here, Sean?
I'm relying on Shane Oliver, Chief Economist at AMP, to help me out here. New listings have been trending up, and there's a high risk of increased listings by distressed sellers based on the Reserve Bank's own analysis. Now, roughly 1 in 7 home borrowers in July were cash flow negative. What's that mean? Income is less than essential living plus mortgage costs, cash flow negative. That was back in July, 1 in 7. It's probably higher than that now. That certainly puts pressure on budgets, directly or indirectly. It's hard to see this not leading to a further increase in listings. Immigration levels have likely peaked. The rental crisis is improving, albeit slowly, and lower rates are still some way off. Put all that together, and Shane Oliver reckons house prices will fall 5% next year.
Just quickly, Sean, are we starting to see this play out? What happened in the auction market over the weekend?
We're not really, not yet, but you wouldn't say the market's booming. Solid weekend for auction results, 67% national preliminary clearance rate. Sydney was 68.5, Melbourne was 64.6, Brisbane and Adelaide came in much higher. So it's solid at the moment, but it's not quite as good as it was a few weeks ago, and certainly not as good as it was a month ago.
All right, moving on to story number 2 now, Sean. And for the month of November, Australian shares were up 4.5%. That's a pretty good effort, isn't it?
Sure is. It comes on the back of a less threatening inflation interest rate environment, while geopolitical factors are just a touch less scary at the moment anyway. Also, December's normally a pretty good month for equities in Australia. In fact, over the past 40 years or so, April has been on average the best month for the Australian All Ords, followed by July and then December. Now, the worst month's been September. We're heading into December after a strong November. That's pretty good. If you look at Wall Street, it's sort of a similar story. In fact, it's even better there. Wall Street rose over the weekend. For the month of November, it was up 8.9%. That's one of the best Novembers on record. And that's saying something, because November, over the past 40 years, has been the best performing month on average for US stocks. Now, Wall Street's benefited from inflation indicators all suggesting the pace of price rises is slowing. There's also been commentary from the Federal Reserve about it not having more rate hikes. Anyway, it's just been a really good time for markets, and December traditionally for the Aussie market is pretty good as well.
Okay, story number 3. It's a big week for interest rates, with the Reserve Bank board meeting tomorrow to decide whether to hike rates for a 15th time, Sean, since May last year. Isn't that incredible when you say it like that?
Yeah, it sure is. The sense among economists is that the central bank won't do anything tomorrow, but they could well move at the next meeting in February next year. By then, the bank will have December quarter inflation data. Now, last week, Reserve Bank Governor Michelle Bullock said the central bank needed to be careful about rate rises. She's wary that some people are being hit much harder than others. But she also said that households and businesses are actually in a pretty good position, and that households coming off fixed rates are doing fine. That suggests she will move if she thinks she needs to.
Story number 4, there's plenty of M&A news this week, Sean, and we'll combine 2 stories into one. So it's really kind of a bonus, really, isn't it? Today, the shareholders of Origin vote on whether to accept Brookfield EIG's near $20 billion bid. And at the same time, we've got the ANZ Suncorp Bank $4.9 billion deal going before the Australian Competition Tribunal today.
Starting with that one, the ANZ Suncorp Bank hearing, the Australian Competition and Consumer Commission has already said no to the deal, worried about competition. ANZ's appealed the decision. If it wins over the next 9 days, it gets Suncorp Bank. Now, plenty of people think this deal should go ahead, just not the ACCC. Even the Queensland government has got involved, siding with the merger at the tribunal. An interesting aside on this one is that Bendigo and Adelaide Bank, which is worth about the same as the bid price, has told the tribunal it could make a compelling offer for Suncorp Bank. Then there's Origin. Aussie Super has 17.5% of shares. It doesn't want the deal to go ahead to pass. The deal needs 75%. It's got Buckley's, and given the offer's about $9.36 a share, Origin share price closed at $8.18. Everyone knows this one ain't going to make it.
Last one, story number 5. This is just too good a story to ignore, Sean. In a particularly romantic move, BHP boss Mike Henry and Canadian National Railway Chief Executive Tracy Robinson have both received board approval to date.
It used to be about flowers, champagne, a little poetry. Now it's about corporate governance. Henry needs a blessing of his directors because a Canadian business is building a railway to the mining giant's potash mine. No small project, this one. The mine itself is in Jansen. The first stage of that railway was worth just under $6 billion. Canadian National became the preferred haulage business in July this year. Both Mike Henry, Tracy Robinson went to their boards, said what's going on. Apparently there's no conflict of interest. In fact, Canadian National said steps had been taken to guard against any potential issues arising from the arrangement. Wonder what they are.
This is just to date. Sean, can you imagine if they wanted to get married? They'd have to go to a shareholder vote, wouldn't it?
Probably.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It is Monday, the 4th of December, 2023. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed Business News wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.